The following is a presentation of TFNN. Live at TFNN, The Money Masters.
Let's go to Shivan in Boston. Shivan, what's happening, brother?
I'm watching you both on Tiger TV.
That's a beautiful thing.
Yeah, definitely it is. Learning a lot from Tiger.
Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Money Master Show. I'm Steve Rhodes, and filling in for Tom today is our man Basil Chapman. You know, we had to reach into our Olympic pool, and Basil has been kind enough to join me here for the next hour, and then you'll stay tuned. Basil will do his full hour as well. Let's take a quick look at the markets here, see what they're doing. You've got the Dow up 79 points right now, S&P up about 0.6%, so both the Dow and S&P up about 0.6%. S&P up 8 points. The composite having another strong showing here, up 24 points right now. The Russell 2000, though, they were in the lead on Friday, and they have taken over the marathon race. They're up almost a full percentage point, up 7.65 right now. You've got Microsoft is up 35 cents, Intel up 18, Google up $6. Popping to the upside here, you've got Cognizant Technologies. They're leading the charge dollar-wise. They're up $7. Google right behind them, up $6.76. Sohu Communications, they're up $4.65. Baidu up $4. And Mercado Libre, MELI, up about $4. You've got Ralph Lauren, RL, the ticker symbol. They're up a couple of percent this morning. To the downside here, let's see, other than ETFs, you've got CF Industries. CF Industries trading off about $3 right now. That's down a little over 1%. You've got Priceline pulling back 0.3%. No big deal there. Tesco Corp down $1 and change. Sturm Ruger, RGR, they were struggling. I think they were one of the few IBD stocks that was down on Friday. We'll take a look at RGR in a bit. But first, let me welcome Basil Chapman. Basil, how are you?
I'm good, Steve. How are you?
I am doing great. So, did you catch that tennis match yesterday?
I caught some of it.
Let me ask you: would you have been pulling for Andy Murray or for Roger Federer?
You know, it's very difficult sometimes when. I'm going to give you a correlation with your question.
Yes.
First, I'll answer the question, and the question is. Would you root for the guy who's worked so hard to get better and better and better and better?
Yes.
Against the odds of the domineering personalities of the game?
Yes.
And that would be Andy. And what's really important about this is, on the other hand, do you want to put down the person that's kept his it's even more difficult to keep your standard at the highest level.
Sure.
But I thought that. I thought that from what I had seen, that definitely the Brits were going to get it.
Yeah.
That there was a greater chance, and that it was just fabulous playing. And the correlation to that, the question that you had, it's more kind of a moral question than anything else. I mean, your own. It's not the other person's. They're just doing their best.
Absolutely.
It's the same as Pistorius, the South African Oscar. I remember seeing that story, or maybe it was on 60 Minutes or something like that.
Oh, okay, cool.
About the development here at MIT in Massachusetts, in Cambridge, at the Massachusetts Institute of Technology.
Yes.
How they've been working steadily for years, especially with the veterans that they've been trying to help. One veteran in particular had, I think, either one or two of his legs amputated at some point.
Yes.
And he's a scientist, and he had been working on this particular project for the artificial limbs. Well, this prosthetic that was used by Oscar Pistorius, the question has to arise, and I think it's a very fair question. On the one hand, it's unbelievable. This is a young man, I think at the age of three years old. He had lost the bottom part of his legs.
Yes.
And his mother would say to him, "Your brother's climbing a tree. Go climb a tree."
Yeah.
Yeah,
which is great.
okay.
Yeah,
I mean, fantastic.
She would
right?
say, "Your brother's putting on your shoes. Go strap on your legs."
Yeah, go do it.
Which is great.
And I think that psychology is imperative. It's beautiful. And what happened was, the question now is, I think in a sense that there could be a technological advantage. Is that fair? Well, it's the same as sneakers. It's the same as your spikes. I remember when I was an athlete, I heard you talking about the 100 yards. I was a sprinter right as when we had 100 yards in high school.
Yes.
But I also ran for my province in the Open, which was the adults over 18 or 19, I think it was.
That's great. Okay.
And I was only 15 years old. But for those races, we ran meters because South Africa was trying to transition to meters.
Yes.
Well, you have to wonder because and I remember at the time my parents spent a lot of money. They bought me these English spikes with the little spikes at the bottom.
Yes.
And what was it called?
Did they give you a real advantage or just in your mindset?
This is what I wanted to say. I chose because they were handmade. They were just beautiful. They looked good. They were red and white and black or something.
Yes.
I got these. There were 6 spikes, but the fashion at the time. Now I can't remember if it was. Puma. I think Puma had 4 spikes, long spikes.
Okay.
And most people went for that. I chose the 6 because I was just really comfortable with it. Well, when it comes to technology, it's the same thing as what we're going through right now with the speed of executions that you can go to. There are some hedge funds that are trading perhaps 2 million stocks in the space of minutes.
Yes, absolutely.
Well, this is what happens with technological advances. So the real question will become: is it an advantage that he'll be allowed? I mean, there was this moral incentive to allow him to run, which I would have personally voted for. But there is going to come a point where athletes are going to say, "Hey, wait a minute! He's got this rocket ship that he's just riding along."
Yeah,
is that fair?
Yes, but Basil, and certainly that was a part of what was discussed over the weekend. Now, I wasn't familiar with them until Saturday, and so Saturday I watched him in the quarterfinal race out there. And they brought up the fact that maybe there was a little bit of a spring action, and then they brought in a couple of doctors or what have you that were working on that technology for him. But when you took a look at the final race yesterday, where he was truly going up against now this was just the semifinal, so he was up only 1 basket of the elite out there.
Right.
He ended up coming in last place.
Right.
And it wasn't, which I wanted to see a little bit better showing, but obviously he had exceeded, he had met his goal. He said
it was unbelievable.
He set his sight on being able to make the semifinals.
And what an inspiration! We've got so many inspirational. You talk, your whole thing is about inspiration. I love that. And just think of what's going on in the games right now. When you saw the women's Olympic, the American Olympic team, and they got crushed on some of their first jumps, their first whatever they had to do.
Yeah, right.
Whether it was the high horse, over the horse. Well, they came right back.
Absolutely.
It's really beautiful to see. And yes, that's what we try here at TFN, is teaching people how to just get right back up and do what you need to do.
No, absolutely. Well, to answer my own question for you, as much as I love Roger Federer and everything that he's been able to do for the game, I thought it was just simply marvelous the way that Roger ended up winning Wimbledon, and I think that put him in a special rank, maybe with Pete Sampras or as far as number of Wimbledon wins or something like that. But to actually have Andy Murray, break through. And it really is all about a breakthrough. It's now that he's won, now that he knows that he can do it,
it's a different level.
Yeah, and the way that he actually beat Federer out there, I think that we will see his name in the winner's circle more often. And he really played well yesterday. Well, he had some great shots, absolutely fantastic shots. And he had been crushed
previously, not for being outstanding. He was crushed because he was playing just more experienced and better players at that time.
Yeah.
So he was doing fantastically. He's always been a fabulous person to watch. I love that. I think this games has had some real treats and real surprises. It's been a pleasure to watch.
Yeah, it has. So people want to know about the high jump that took place in the market on Friday. And so, the market closed up 260 points or so. Was it 260, 236? I can't recall what the number was. But
Yeah, it's funny. I watch this every minute of every day. I've been doing this for 20-something years. At the end of the day, you ask me, where does the Dow close? I haven't a clue.
Yeah, I know.
And I'm watching every minute. I just...
That's great. And folks, hopefully you're watching us on Tiger TV. If not, if you're listening on the radio, thank you so much. You can always catch the archive of this show on Channel 10. And one of the things that we're doing here is really going to show some multiple techniques. The beauty about having an Olympian like Basil Chapman here with us at TFNN is he uses his own techniques that give him a competitive advantage. So whether it was the shoes that his parents bought him that he strapped on that had the spikes, I think it was those shoes, and he's carried those to those days right here and right now. And so when he takes a look at, a tool out there that gives him a competitive advantage, it's called the Chapman Wave. And, I talk about breathing patterns in the markets, or oftentimes AB equals CD. And if we take a look at the Dow right now, if that's okay with you, Basil.
Certainly.
We've got the Dow, and if you're watching us on Tiger TV, folks, whether you're catching Basil's chart or my chart, I'm not sure whose is being shown here. Right now what you're seeing is that the Dow is what Basil calls leg D up. It moves in at least 4 wave patterns out there. And that means what to the listeners here, folks? Basil?
Well, what it is, it's a very simple technique. The concept is, and it took me a long time to get the concept, but the concept is from an initial starting point, and usually I like to say the most obvious lowest low bar. I say low bar because you have to go through, it's not the lowest low. You can make a lowest low,
yes,
but the bar itself, the very next bar could be even lower.
Yes.
So what I'm looking at here is that the lowest low bar.
And so, folks, if you're doing this on your charts at home, you could actually start going back to the June 4th area. If you just started really from scratch.
Start at June 4th.
And
the low of
yep, go ahead, Basil.
Dow 12,035.
Yeah.
There was a little doji candle, followed by another candle, small candle, and then an explosive move up. We've seen a number of these explosive moves up. Fascinatingly, if you look at this particular chart,
yes,
you'll see people always say, we go down quicker than we go up. Well, sometimes you just got to look at enough charts. If you look at thousands and thousands of charts, you will see that, in fact, it's been the opposite here, that you've gone up in huge moves and then consolidated and then moved up again in a couple of big moves. So this is what I'm looking at. From the low of June the 4th at 12,035,
yes,
you get peak A on the 7th of June at 12,555. Pulls back for a day, makes a higher high. If you go past peak A,
and folks, it only pulled back. It only pulled back by just a small amount, didn't it?
Small amount
on that prior day.
And then it breaks and goes above it and goes to 12,650. That's B. Then it goes to 12,898, and that is on the 19th of June, and that's C. Then it pulls back much sharper,
yes,
holds the 200-period exponential moving average, and spikes up to 12,961. That is a D.
Yes.
Then it pulls back to that 200 period. If you're looking, folks, at Tiger TV, you'll see that there is a line called, it's a 200 period moving average. It's the exponential moving average, and that's at about 12,570. Now it was a little bit lower then. Starts a brand new move. I've changed this now. Because what we'll talk about is the parallel wave count and how we've gotten to another leg D and what that implies and what we can look at.
Perfect.
And we'll do that together.
We'll do that. Yeah. Stay tuned, folks. Basil and I will be back. You got the Dow up 74 points right now. S&P's up 7. Thanks so much for joining us here at the Money Masters. Stay tuned. Basil and I will be just right back in a few moments.
Thank you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes here with Basil Chapman. Basil's being kind enough to fill in for Tom today. Tom will be back on Monday, I believe. Or on Monday, he'll be back tomorrow, I believe. He is in the Colorado area, as I recall. I think he is doing a workshop tonight for the Tiger Fund. And folks, if you haven't heard about the Tiger Fund and you are an accredited investor, what you can do is you can email Kathleen at TFNN.com or give the office a call, and she can get a packet out to you, and perhaps you can attend this evening's session out here. Right now, you've got the Dow trading up 73 points, and what Basil and I are looking at is the Dow chart. We're taking a look at his Chapman wave. We're taking a look at really a couple of different patterns here that are coming together really at the same time. You do have the Dow right now trading into, or it has gotten into the lows of May 1st. And May 1st is really the target out there as you take a look at the Dow and the S&P. The low on May 1st, remember the sell-in may go away? Well, it still may not be over, folks. The low of May 1st here, 13,174.65. You're trading at 13,170 right now, but the Dow did get up to 13,177, and it is in leg D yet. But just stepping back a bit here just for a moment, Basil, maybe you can describe to the listeners here, you had the Dow make your peak D coming back into the July 5th time frame, and then it went ahead and pulled back, you were saying, as we were going into break, pulled back into that 200-day exponential moving average. And then it went ahead and it's now made another series of A, B, C, D. Now, this is different than A to B equals C, D that I refer to, folks.
Correct.
This is just simply just doing nothing more than an easy way of being able to count the higher bars, the higher peaks inside the patterns here. So it's a very easy system to use. But why did it start a new A to B equals C? Not A B. Why did it start a new A B C D pattern versus a continuation possibly of E and then
Correct.
F and maybe your rogue G wave, if you will?
Right. So thank you for you show a great knowledge of the Chapman wave. So thank you for pointing that out. Now what we're looking at is at 12,961. The Dow pulled back and it held that 200-period moving average around about the 12,492 level.
Yes.
Then it started, you can see, and this is the whole thing about the Chapman wave, your most important obligation to yourself is to make sure you do not miss a peak or a trough, especially the peaks.
Yes.
So one would easily look at this and say, this is continuing, but in fact, the high that was made on the 13th of July, 12,784.73, the next day was 12,779. It's only 5 points lower, but that is a peak.
Yes.
So that I put, as I call it, a gray letter. In other words, whatever chart coloring I'm using in my background, usually it's yellow letters. In this case, I say it's a gray. Why? Because underneath the former peak D, with a sharp pullback, this could fail at any point.
Got it.
But what happened is it then went to a higher high. It went to 12,977, higher than the previous peak. So I call that E. And I call it E/B. Why? Because right at that particular point, the stochastic and the MACD was still doing okay. Then all of a sudden it pulls back, stochastic and MACD pull back, goes back to the support level, almost at the 200-period moving average.
Absolutely.
But it's formed a beautiful trend line. Two trend lines, parallel trend lines, make a channel.
Yes.
And that starts this channel. Now I'm looking at the channel and say, hey, if it fails from here, that's very negative. But if it breaks even 1 penny above the previous high of 12,977, that could take us to Lake F.
And Basil, with that pullback that it had, so with the pullback where it came back into the 200 EMA on July 24th, it still retains that characteristic of that E/B.
Exactly. And what I do usually is I put in, I'm showing here on the chart, I put in a plus sign. Why? Because the technicals were not that good. So the price had to prove itself. Once the price proved itself, I don't have to quickly put in an up arrow because I need a lot more evidence. If you look at the cup formation on the left, all the way back from the May low, the May high, down to the bottom in June, there was a beautiful left side equals right side price time match. Then there was another one, just from the 12,961 high to the 12,977 high. Then it pulls back. Once it breaks out above that, that is really important. Why? Because all of a sudden you get this doji candle at a potential peak F. That's usually a sign to say, hey, be really careful.
And that's the doji, folks, from July 30th that Basil's talking about.
That's the doji right. And it pulls back and it goes under the 9-period moving average. That's the white line. And what does it do? It goes underneath and it gets to the 50-period moving, the little dashed line there. I have these little moving averages in background because they're unimportant until the price gets to it. It holds it, and that was a very important session on Friday. Why? Because if it broke to a new recovery high, that starts an unequivocal leg D, because that's what you look for, is Ds.
Perfect.
So that's where we are, and we can talk about that if you want when we get back.
I do. I want to ask you about your Rogue Wave G. So, folks, stay tuned. When we come back, 877-927-6648. You're welcome to call, because you, too, can post a question for Basil or myself. We'll be right back, folks.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his Market Take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of tfnn.com.
Welcome back, folks, to the Money Masters Show. Steve Rhodes here. Also assisting me today is none other than Basil Chapman. And stay tuned because Basil has his own show that follows this. Then we go up to Larry Pesavento. Then we've got, oh boy, I somehow had a little brain contusion here. Basil can probably go to Daryl Martin, David White, Ken Shreve, and then filling in for Tom today, I believe we have Kate Stalter and Ken Shreve as well. Let's go to one of our callers. Let's go to Ilsa. Is it? I lost it here. Yeah, Ilka from Boston. Ilka, thanks for calling. Thanks for holding.
Hi, Steve, and how, Basil? How are you guys?
Excellent.
Oh, thank you.
Thanks for calling.
Hi, Basil. Hi, Basil. I have a question for you.
Yes.
How are you doing? First of all,
I'm doing well. Good to hear from you.
On the Dow on the daily.
Yes.
Is there a possibility that your B&E peak that you have
Yes.
is actually an E, because of the retracement afterwards. And the C and F, it could be actually a new A.
In other words, your question is: was the doji high the doji at 13,129.28 on the 30th of July? Was that a pullback? Took 3 bars, and the 4th bar it broke out. Could this possibly be the start of a brand new buy mode?
The one that I'm talking about, you know how we have that peak D on the 5th?
On the 5th, yes.
Then there is that gray A that you possibly have.
Correct.
And a B and an E possible.
The E/B, yes.
What if, could that be an E actually because of the retracement afterwards, which is the 3 candles?
That is a possibility, and one of the reasons why I've tried to keep it as conservative. As you know, I like to be as conservative in the Chapman wave as possible, so that if there is a question and if there is what we call a restart, I want to get to the D as quickly as possible and know that I can prepare for it, rather than be surprised by having an incorrect count calling it C. And so what I've done here is I've been very conservative. I've also tried to tie it in, if Steve doesn't mind, if I can do this.
Go right ahead.
The S&P has pretty much the same alternate wave count. I'm calling that D right now. The Qs, the QQQ Trust series, I'm using what I call a phantom peak. I use it very rarely, but only under certain circumstances. The highs of the 13th and 16th of July at 63.52, so that we have parallel wave counts everywhere. If you look at the IWM has a wave count. That's the one that's starting a brand new A, but it's the laggard. So I'm kind of saying, okay, that's the laggard. It could still fail. But the more important, if you go to the NYA, the New York Stock Exchange, you will see that we could have alternate wave counts, and this goes to a B. So if I've got B in the New York Stock Exchange and D's in the S&P and the Dow, and possibly in the C and the Qs, things are closer together. It's saying to me that we should still run up further. But you know, my major thing has been that if the volatility index stays, especially in the teens, and doesn't go to the 20s, that can create buying pressure. So we've got the 3 bears. That's the TLT, the dollar, and the volatility index. Weak right here. They're not really participating at all. They're pulling back, or just kind of having pulled back. They're just stable. So that tells me that probably we have a little bit more room on the upside. And as you know, in my work, I don't have to actually worry about the wave count right now. As long as the MACD is strong and the slow stochastic, which is at 77%, is going towards the 80%, I have the room, the luxury to wait a little bit. That's the most important thing. So you got a great question. The answer is that...
So it's actually perfect, because you went to the New York Stock, and this is why comparing that, and also I actually use 120 minutes as well, the 4 hours, but the 4 hours, not the 120 minutes, is showing me that there could be that a third possibility, which I'm questioning actually, that instead of just the 2 that you were talking about.
Well, the New York Stock Exchange right now is probably in leg E up in the 120-minute chart, and that diverges. No, it doesn't diverge at all. Yeah, that's right, and it does diverge because I'm calling this leg B up in the 120-minute chart. Yes. Although there again it could be G, but just really everything about it, the stochastic's holding well. Stochastic is very important, and the MACD. I'm going to ask Steve if he doesn't mind also looking at what he sees as a potential upside and downside on the Dow at this particular point, if you don't mind.
Sure. You know, what I see is you've got an AB equals CD pattern that's out there. And that A pattern started off of that June 4th area, which was really, you know, when you take a look at the number of aspects that were out there, lunar aspects, was also a P index date. That's a real strong area of support here. But your A to B equals CD, a 1-to-1 completes at 13,313. That says that the May 1st high on the Dow wants to get tested. That's at the 13,338 level. And so that's at least the patterns that are out there presently. You do have to pay attention to the mere fact that you've got the Dow inside that May 1st area here right now. So I think it's important. It'll be helpful for the Dow to make its way up into the highs of May 1st, for it to close into the above 13,174 today.
It's very interesting you say that, Steve, because if you want to look at my chart, this is the white background chart that I show my subscribers every day.
Yes.
There's a left side, right side price time match from the 13,338 high of the 5th of May.
Yes.
That went all the way down to 12,035. I choose certain points, certain bars, certain candles, certain inflection points for that. And that comes in tomorrow, the 7th of August. If there is another sharp rally, that whole area between 13,000 with this little dashed up line, up channel support comes in at about between 13,200 and say 60 and the previous high of 13,338. So that's another reason we're coming into what should be a very strong resistance area.
We are. And even if you just simply go over, you don't have to, I'm not asking you necessarily, Basil, but folks, if you go over to the DAX right now, what the DAX is doing today, it's completing the 0.786 Gartley sell pattern. And, that the Gartley sell pattern would be really at 69.20 if you're going to be exact. At 69.21, it's trading at 69.30 right now. So things are setting up here. When you take a look at Basil's Chapman wave, his count, you're now either in leg D, which you won't know until tomorrow.
No, this is, I'm calling this leg, for my Dow chart that I'm showing here with the white background, having touched the 200-period moving average, I feel very comfortable calling this D because it could still go to E and F.
Yes, and it can still go higher. So the D point hasn't been completed, until the earliest would be tomorrow here. So you do have some areas where you have things that are coming together. And if you take a look, folks, at Basil's chart or my chart at Tiger TV, you'll see after these D levels, these fourth waves have been made, you see relatively sharp pullbacks. At least it did the last time. Now, what also, if you're watching my chart here, and I know Larry's coming up, but in a couple of hours here, and one of the things that you're running into at a call as I was doing Tom's show last week about the Bradley model. So the Bradley model, folks, goes back to 1946 when Donald Bradley produced a book called Stock Market Prediction. And what he does, folks, is he just simply takes a matrix of planets and attaches positive and negative numbers to it. And what you're also seeing is that the Bradley model suggests that there's going to be some type of turn down, any time here in the near future. Potentially it could have started last week, but obviously with the market moving higher. So now you've got these patterns. So you've got a 0.786 Gartley sell pattern on the DAX. You've got where you are at least in leg D here on the Dow. You're getting very close to completing the A to B equals C to. You certainly are making 100% move of a move. You're timing it with Basil's left side, right side, price time match here. So it's not necessarily the area to jump on board. It's the area to be careful, in my opinion.
There's another thing as well. If you're looking at sectors, you will find that there are certain stocks that before would have been the leaders in a move like on the upside that have just completely stalled out, and they are very important. And one of those is the RTH, which is this is the index itself,
the retail holders trust, right?
And that retail holders trust, funnily enough, we got stopped out by 2 cents of a short being shorted 42.61, so we lost 75 cents. But I'm still looking at this as a potential short the retail vectors, the market vectors retail ETF, because it's everything about it is the same. It's the same situation. You're rounding up, so you look at the monthly chart, so that looks pretty good. But when you get to the details of the smaller time frames, you're watching closely to see that a lot of energy is being expelled or expended, and the price has not really gone up. So it hasn't broken down. It's just something that I've got my eye on to watch, because if the retail index finally starts to turn down, that's kind of an economic statement, I think.
Yeah. Basil, let me ask you a quick question as well. Maybe this maybe Ilka even has the same question. Is there any possibility that this next move, the move that we're in today, the continuation of this move, that this could be, what would make this what you call a rogue wave G?
Okay, well,
is that even a possibility here?
At this particular point, not really, and I'll tell you why. The whole concept of the rogue wave, if I go to, say, ASA as a good example, just off the top of my head, I remember seeing this and writing it down as one.
Sure.
I've got a whole book of these things. There it is. The rogue wave essentially, did I write it down? There it is. The rogue wave essentially does this. There are all the signs of a sell signal. In this case, ASA is ASA Gold and Precious Metals. It went to a high on the day of the 8th of September 2011 at 31.67.
Yes.
The stochastic and MACD, everything starts to turn down. The price turns down. It goes under the 200-period moving average. And then suddenly, out of the blue, there's this one wave that didn't see the sign of the beach that said high tide at noon. At 12:06, splash, it goes higher. But that same bar plunges to the low of the day or the bar of that period, and then collapses after that. That's a rogue wave.
Got it. Okay. Makes sense.
Thank you guys very much.
You bet.
Okay, have a good one. Bye.
And thanks for calling, Ilka. 877-927-6648. Dow's up 79 points. And Basil, you wanted to take a look at the S&P on a monthly chart. So let's go to that. And what was it that you wanted to look at there?
I have a question for you. On the monthly chart, is this the one I wanted to show? Let me just see. Is this the one? Yeah. This is the monthly chart that I'm showing right here.
Yes.
Has... there are strong moves to the upside, and we can go all the way back to the 1557.87 high back in 2000, plunges down to the 200-period moving average at 768. That was a peak D top, comes down, trough E, and starts two moves that go not just to D, they go slightly higher to an E, but two of them goes to 1576, plunges down to 66.
And that took us to the highs back in 2007.
That was at 2000, yes. And then it plunges to the March low of 666. And now what we've done is we've gone peak D, and this leg is leg E.
Yes.
But it's all underneath the previous high.
Yes.
Now my question to you is, I'm going to squash the chart just a little bit.
Okay.
My question to you is, in this particular pattern with your A, B equals CD.
Yes.
What do you extrapolate from the chart?
Well, I extrapolate that the S&P still wants to travel higher. That the S&P actually wants to go all the way back to the October of 2007 highs. The 1-to-1 A to B equals CD is 1563. And it was in that track, it was on that inside track all the way up into the May 2011 time frame, when it then started pulling back here. But that A to B equals CD pattern is still in place. To the upside, would take you to 1563. Even the C point that was established here, folks, that we're looking at is July 2010. Now that bar, the top of that bar was tested as the S&P pulled back in October of 2011, but the C point itself, which is the low of the July 2010 bar, that price is 10,1091. That is still, that's still in place. And there's also Basil. There's also a shorter term A to B equals CD chart that is up. And I show this in my newsletter every morning. I show people what the long-term, short-term, and intermediate term posture of the market is. And I just simply focus on the S&P. Now, the S&P did make a 1-to-1 A to B equals CD, and it did that the month of April 30th, 2012. Now, at that same point in time, using your system, Basil, was making a peak E. And so you expect it to actually pull back. But, the pullback, quite frankly, wasn't really that substantial, because if you take a look at that retracement, you only did a 0.382 retracement from your peak E, or the high in April of 2012 to what was put in here in just recently, the June 4th lows.
Right.
And so it actually is signaling long-term still a strong move up.
So now what I've done is I've shown a different chart. It's the same chart, and I'm going to spend a little time on this in my show coming up. I wanted to show, because I've done this as a black chart, which I show to subscribers, and I'll show it right here, and we'll switch from the black to the white. I happen to find the black is, for me, visually just a clear picture.
I like it as well. Folks, stay tuned. Basil Chapman, Steve Rhodes. You got the Dow up 78, S&P's up 7, 877-927-6648. One more segment to get in touch with us, folks. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of tfnn.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour. Next on TFNN.
Welcome back to the Money Masters Show, folks. I'm Steve Rhodes here with Basil Chapman. We've got the Dow up 81 points right now, and if we take a look inside the Dow, you've got all stocks green with the exception of 3. You've got Johnson & Johnson down 13 pennies, no big deal. Walmart down 8 cents, and we know Walmart, Basil, can you believe that stock? That thing is
unbelievable.
Thing has broken out, and so it's a beautiful looking stock chart. We are taking a look at the S&P here right now. The S&P at 1398.61. It is trading inside the May 1st first swing point, folks. That low is 13.95. Looks like the S&P wants to go up and tag the 14.15 level. You're at 13.98.67. So go ahead, take it, Basil. You were talking about the S&P on the monthly chart before we went to break. And
right. If you're looking at the monthly chart, you will see that from the entire period of 1994, 95, 96, 97,
yes,
there was a very well-defined up channel.
Absolutely.
And that up channel continued all the way to the high in March of 2000
yes.
at 1552. When it came down to 768, there was another well-defined channel. Within that channel, what I like to do is I draw something that I call the inside track. And the inside track is when you think go-karts, it just bounces off the one wall and goes to the other side, and that's exactly what we're looking at. Every time we
sometimes that's when I'm driving on my inside track.
So here we've got the support levels. I call it the propellant line.
Yeah.
So the green line essentially says if you hold within that level, that's your propellant area.
And what do you use to calculate your inside track? Is that a percentage or is that a proprietary number?
I come from this as a visual artist because that's what I did when I left high school in the visual arts.
Perfect.
So I look at it, and I can tell you right now that if I had to define it statistically, each one is different, so that I love to look at the most hit points of contact. So in other words,
yes.
the outer points, if I'm looking at the inside track, I would look for the lows where there's a lot of price reversals, and that says that's the support. So, but it must be, I usually like to say 3/16 of an inch, but when you're looking at long-term monthlies, these are bigger.
Yeah.
Now look what happened. It held the support, went to trough F, and then you had a beautiful up channel.
Yep, absolutely.
You had a left side, right side price time match. It went 2 bars longer, but you broke it beforehand at that 1576 level. Then you plummeted down, and there's another beautiful channel. Now we're in the same kind of channel on the upside. It is wider. It means that there's greater price volatility, but the price movement is making higher highs and higher lows, and that's really the definition of a buy mode as far as I'm concerned.
Yes.
And a sell mode is when you're making consistently lower lows and lower highs. Well, the inside track we hit once, and that was back in October of 2011. We did it just recently in June, and now we're out of it, and there's another line that I like to add, and that line just says this is the, I can't call it near term, we're talking about monthly charts, but this is the closer support level. So as far as I'm concerned...
So you're going back to the October lows.
Right. So if there's any reversal in the S&P,
yes.
and you take out 12.23, there's a lot of activity between 12.22 and 12.24. So somewhere there, if you close underneath there, probably going to test the up channel support, the propellant line.
Yes.
We haven't gotten, and here's the other thing: every time you get near the repellent line on the top, that's when you expect a reverse. There's a whole bunch of work that I'm doing right now that says when you start to fail underneath even the inside track, and that's that red dashed line, if anybody can see it, and that now at this particular point will be all the way up at 1497. But when you start to fail and you turn down from there, it means you're running out of upside energy. That makes August really important.
That's great. Well, folks, stay tuned. Basil will be up for his full hour in just a few minutes. Thanks for joining us. What I can tell you is the Gatorade, the energy right now in the market, happens to be in the euro. The euro here looks like it's on its way to 1.24033. It's trading right now at 1.24062, 1.24203. That'll put some energy into the market. Basil, thanks so much for joining me. Absolutely love doing the show with you. Have a great show. And stay tuned after that, folks. You got Larry Pesavento, Daryl Martin, David White.
The power of the